Hello, hello, hello. Good morning. Welcome to another ES Futures trading stream. Today is Tuesday, May 16th. It is 8:55 a.m. I'm a little bit late. I have to take my daughter to school, so I apologize. We have a retail at 8:30. I don't know what happened here actually. Let's see what this market did. Oh, what? It's not updating. What's going on here? Okay, here it is. Oh, oh, the heck, man. Oh, boy. Oh, I know what's happening. It's not, I don't have the overnight here. Okay, here it is. We have a big spike and then a break, upside spike and then a break. All right, all right, that makes sense. Oh no, this spike is kind of, that's a retail sales. Look where the spike went to. Kind of like it just was sold from Saddle. Yesterday, the market was being bought from Saddle multiple times. Sold from Saddle. It seems like it's doing the same thing again. Now we have an intraday weak level here from yesterday. This weak level here. Look at what it has been bought. Right? There's a bunch of stops here down here. There's more stops here. More stops also. This is kind of more like a today's, right? This is today's business. This is from yesterday down here. Uh, it is inside the profile, inside the overnight. Can see some pressure to the downside, but the overnight inventory is 100% short. You can see Cedo up here. Am I right? What is last here? I didn't I did last? Where is last? Let me take a look. Last. How much is last? Last is 41, 48, 75. Oh, sounds like Cedo. 41, 48, 75. Right here. It was all from last or Cedo. Call it whatever you want. I think the most important thing is this level here. Uh, it happens to be also what now is held back. Very, or at least very close to held back. Oh, my bad. My bad. It's not held back. All right. Something that I want to uh, do here is Jim has a webinar today. I want to put that on. I want to be, yeah. If you have time, just watch this. It's very informal. It's very educational. It helps with trading. There are so many things that we need to be aware of, and there are so few people that can have or teach you market understanding and give you some perspective about the dynamics of the market. This is something that you want to attend. I will be watching this. Um, you can sign in you can go to his tweet, you know, and signing here is free. It is free. It doesn't cost anything, and he spreads a lot of information, a lot of education on those webinars. We have a spike here. Well, we have a spike in this case to the downside. Um, I don't like this high here, and the fact how it's being overnight inventory short is being sell. You can see this the selling coming here, selling coming here. What is the reaction to an overnight short inventory? If there's a counteraction, if there's a counteraction in the to the overnight, that will be a rally. Yesterday it was all day. All day the market was doing a counteraction to. Nah, my bad. The first part of the day was a counteraction to the overnight long inventory. Was a break. You give us a break and then rally all day long. Okay, this is also. I'm going to replace this one as a weak level and also late pullback low. Okay, this label color. I'm going to label as green. Okay, to identify this as a late pullback low, also as a weak reference. If the market trades or builds value above this level, it means that the movement is still there. What is the movement? To the upside, right? Really weak or low volume throughout the day, but it increases at the closing. Now we can see it closed high, closed high. But the difference relative to this day is that we are beginning. This is the beginning of the month. This is the beginning of the week. This was Friday.
Speakers. Good morning, Jim.
Good
So
morning. We're going to do a very brief commercial. The reason, of course, we do these free seminars is to draw attention to our
the
educational
webinar has
process.
started.
Jen, why don't you just do a very fast recap and then we'll talk about the markets.
Okay,
The
well,
webinar
for
has
those of you that
started. I will come back after the webinar is over. Um, I am interested in what he has to say. I have my opinion on the market about the Fed speakers. Retail says today the other is kind of like the market is going to be heavily focused on Fed speakers basically. There's nothing else. We have retail sales, we have Home Depot, Lowe's, Target this week, mostly retail. That's going to give you a picture of the market, of the economy actually, right?
all the official channels here that you find here. Okay. With regards to our courses, of course, we're featuring right now our June in-person event in Houston that runs from June 5th through 9th. And we're going to have a special guest, Peter Resnicek, aka Shadow Trader. This does have a pre-qualification requirement of a minimum of the foundation and application of the market profile e-course. If you had done a full live intensive with us previously, then you are qualified to join us for this if you would like to sign up for this. Our foundation and
Let
application of
me
the
let me
market
just say
profile.
on the live commentary, if you even though you've done the foundation, the
Mhm.
e-course, foundational course, you still have to have an interview with me. I just want to make sure that the people there are have at least a good basic foundation. Jen, go ahead.
Yes. So if you've done the foundation and application of the market profile e-course and you need to set up that quick call with Jim to make sure you've got the go ahead to join us for the June in-person event, by all means, you can shoot us an email, dalton@jimdaltontrading.com, or give us a call at our phone number at the bottom of our website. I was just going to mention here on our courses, the foundation and application of the market profile e-course is here, and this course is obviously a prerequisite for the in person, but also the prerequisite to join us for a live intensive if that's something that you are wanting to do with us in the future. Okay. If you have any questions about which course is right for you, or if you qualify to join us for the in person, by all means, shoot us an email here, dalton@jimdaltontrading.com, or give us a call at this phone number, and I'll be happy to speak with you. Okay.
Okay. Jim,
Jim, I will
thank,
give you the screen.
thank you.
Okay. There you go.
Okay, the first thing we're doing this morning is we're looking at the bar chart for the NASDAQ. Notice the NASDAQ is straight on up, almost at, recent highs in there. And what I want you to see is the contrast between the NASDAQ. Next, we're going to go take a look at the Dow. What is that? Um, I keep forgetting.
Dow Jones.
Yeah, hold on. It'll give it. There it is. DJX. Okay, you see it's almost the opposite. And you've got the Dow is locked between the 50-day and the 100-day moving average, very, very mechanical. So you've got this great dispersion between the two. And then next we're going to look at the ES. And you see it kind of fits in the middle. Historically, as most of you know, I'm 82 years old. I've been trading for a lot of years. And anytime that I have seen the market that is, particularly when the tech stocks are at the highs and the Dow is, struggling, there is usually a violent correction to bring that back into line. Does it have to happen? No, but it certainly has a history of happening. So all I'm saying is right now, so many traders and even investors, they've flocked to the NASDAQ, which of course is tech heavy. It goes up and up and up, and everybody feels comfortable, and that's where the trap comes. The first time this really stuck out in my mind when I saw something similar to this happen, in the 60s and 70s, we had what we called the Nifty 50. And that was where the institutions decided that all they had to do was buy the best 50 stocks and not make any more decisions. That got to be ridiculous and got to the point where the index was going up almost every day, driven by one stock. And that stock at that time was IBM. And of course, when that was over, when finally the ludicrousy of that was over, we had a very sharp break in the market. I feel something potentially similar today when I just showed you, where the NASDAQ is, which is tech heavy, where the Dow is, and where the ES is. And between the Dow and the tech, there's huge, and the NASDAQ, there's a huge difference. And people are complacent in there. That usually is not a good sign. Can I guarantee that? Absolutely not. But what I'm really saying is be aware of what is happening, be aware of the potential trap. Now, today we've had retail sales. You've got the retail sales beat expectations. I don't look at the numbers. I'm aware of what it was. And you've gotten what it's done, because the retail sales were relatively strong. You've got another downward push in fixed income increase in rates. You've got some initial pressure on the Nasdaq and on the ES, but they're still trading, within the overnight range or very close to the overnight range. So yesterday was an inside day. Inside day is a form of balance. Now the markets are balanced overall, and now you're you're opening again within yesterday's range, or at least that's where we would be with about what do we got, about 20 minutes to go. So when the market is in the balance, in the extreme balance that we're in right now, and all you have to do is look, like I say, there's the ES. So we get extreme balance. The message that the market is telling you is it wants more information before it makes its next directional move. I hate to admit it, but I managed to lose some money for 5 days in a row. I don't know when that's happened, not tremendous amount of money, but uh, playing around and getting ready for some kind of move out of the balance. And of course, the market remains balanced, and that's not been healthy. So it's a very frustrating market. It's a very frustrating market to trade. But again, what you want to do is be alert that that potential is there. Yesterday was an inside day, which is a form of balance. We're opening within yesterday's range today, which is more balance. So the more balanced the market is, market's waiting for news, but be very careful because it can be explosive from that. Okay, Jen, let's take some questions.
Okay, Jim, I know that you trade both options and futures. What is your thought process on choosing which to trade for the day, and do you have a preference?
No, I generally trade options, and then I can trade the futures around the options, or I can spread the options out. But I don't have any real routine or any uh, it's always a mental adjustment. How much volatility is in the market? Of course, the volatility has shrunk tremendously right now, and that is a sign of the complacency in the market. Okay, next question.
Okay. Do you really listen to CNBC while trading? I think because I see your toss charts up right now, Jim, and
Yeah,
you
no,
get.
I have what I do. All I have to do is hit it on or off. I listen to what I say, people, that I don't trade based on the news, but I don't live in a vacuum. So when I get up in the morning, I will turn on CNBC in order to have an idea of what the market is focusing on. I don't pinpoint anything specifically, but I don't like to be in a vacuum. This morning I was interested. One of the first things I remember is that Home Depot reported earnings, and they missed the biggest miss they've had in some years. The market had a little bit of a downdraft, but that was all. Nothing really really that dramatic. So the market didn't get all upset. So it just kind of rolled off. And then you're watching and say, okay, we're in the debt crisis. Where's that? Because we know that that can be explosive at any moment in time. And then of course, I'm waiting to see what the market does to retail sales. So I'm not as interested in what the retail sales number is. What I'm interested in is what does the market do with the information. Too many times people get focused on the information itself. And I don't pay much attention to that because what you don't know what the whisper numbers are, you don't know what the adjustments to the prior numbers are, you don't know what the bigger money was really expecting. So what I try and do is see, forgetting all of that and trying to keep my biases out of the way, I look to see what did the market do with that information. So this morning we had Home Depot, which was a little bit on the soft side. We had retail sales, which was okay, and the markets. You've got a little bit of softness in the tech. Uh, at least from late yesterday afternoon. Late yesterday afternoon, the market was, holding right around the 1344 level, and you are trading down below that level today. So it's a little change relative to late yesterday afternoon. So I'll just see if we get any follow through to that. But there's nothing on any of these markets right now to say, wow, uh, this is really in for a big change. Okay, what other questions?
Do you think the Home Depot announcement on weak demand is the beginning of this as a catalyst?
No, it's just a number. Don't don't get focused on one number. That will give you biases, and biases really are very, very expensive. Look and see what the market's doing overall. I mean, if you want to see, there's a lot of reasons out there. Um, you're getting uh, record delinquencies and car loans and behind on rent payments and stuff like that. There's all kind of information out there, but so far the market hasn't acted on it. And what happens where traders lose a lot of money, they get biases on these things. So they get focused on one thing or several. And a lot of times you're right. You say, well, I was right. I was just a little early. Well, if you were right, but you were a little early, you were wrong. Like I said, I've lost a little bit of money for 5 days in a row. Uh, and part of that is because I've got a damn bias that, this market is really overdone and weak. And I'm fighting that bias. So again, when I tell you these things, they're not they're not theoretical. I understand biases. I understand how they work, and I understand how costly uh, they can be. What you really want to do is sometimes it's do as I say, not as I do. It's kind of embarrassing, but I will admit it because it's been a really tough market. But I think the most important thing is to see what the market does with that information. Um, let me let me give you an idea. I'm going to walk through yesterday. Uh, Jen, let's see. We go to my screen. Um,
We're on your screen right now. Right now, you're showing your toss. Yeah,
okay.
there you go.
Okay. So what I'm going to show you now is this is yesterday, and sitting follow along with me. I'm going to split out Friday. All right. So late Friday, the market has a short covering rally. They got down to this gap high where there's three lows. There's no strength down here, but that's what the market's doing. And you get a short covering rally. Now, Sunday night, the market opens Sunday night. And let me split out Sunday night here. So what does the market do? It opens Sunday night and it trades higher all night long. Okay, what was that? Well, the last thing that short-term traders saw was the market in a short covering rally on Friday. There's not a lot of thinking by a lot of short-term traders. So what they do, they're momentum based and they trade all night Sunday, taking the market higher until late in the session. And that's based on all they were doing is based on what the last thing they saw on Friday, which was short covering. Now remember, there's a difference. Short covering is old business, and old business can actually contribute to weakness of the market because it's removing that potential buying power. Now, so when we come in on Monday, the overnight inventory is long. The settle was right at the for Sunday night or for Friday. coming in. The settle was the same as the value area high. So now, if you remember, the if you followed us for any point in time, there's about a 70% chance that you're going to get a correction or a counter auction to overnight inventory. So the next thing, you've got short-term traders got all excited and they followed what they saw on Friday. They took the market long. So the market's long when we come into yesterday. The odds are about 70% you're going to get a counter auction, meaning selling to correct the long overnight inventory. One of the most misleading situations traders ever deal with is a correction or a counter auction to overnight inventory. Yesterday it would have been selling, and they mistake that selling for real strength. And remember, a lot of times you get liquidation, it'll go down very quickly. Liquidation and short covering can go very quickly, and they can mislead you. So all you got yesterday was liquidation. Here's the broken out of the morning. You got liquidation. A lot of traders mistook this for some real selling, and all it was a counter auction to overnight inventory. One of the things that we talk about that you can't learn mechanically, you can only learn by doing, and that is tempo. The tempo or pace as this market was going down yesterday was exceptionally slow in the morning. And that exceptionally slow tempo delivers a very important message. And the message was that what we were seeing was liquidation, not a more potent combination of liquidation and new money selling. So a lot of traders, they got caught long Sunday night and they got caught short yesterday morning and got the whipsaw. And when the day was all done, it was an inside nothing day in there. These are the kind of things that can trap us in a market. Now, where we are today, the yesterday settle, what was, oh yes, here's yesterday's settle. So now overnight inventory is long, or the electronic inventory is long coming
You
in.
mean short, Jim?
I'm sorry, overnight inventory is short. Here's the settle. It's measured from the settle. So now there's a 70% chance that you get a correction or counter auction. If you don't get that counter auction as we near the opening here, that is an indication that there's really some weakness in the market. There's about a 70% chance that you get a counter auction, which would be buying, early buying, in order to bring overnight inventory back into balance. Very prominent point of control from overnight, all these high odds to get revisited. What we say is what doesn't happen very often in the market is actually more important than what does happen. It's like you're having a conversation with your kids, and there's what they didn't tell you may be more important than what they did tell you. What are they keeping from you? It's what I call inference logic. So as we get ready for the opening here in a few minutes, we're looking to see, we're going to open within yesterday's range. Within yesterday's range, the odds are that you get chopped. Remember, yesterday's range was within Friday's range, so the market is getting even tighter when it comes to short-term balance. So that's where we are as we get ready for today. Okay, questions, Jim?
Okay. We accepted Friday's late afternoon spike. Do you see that as short-term bullish?
I don't see a short-term spike on Friday. I didn't consider it a spike. I just considered it a short covering rally. A spike, I guess you could call the M period a spike. I didn't. I saw it as short covering. Okay.
Okay. Do you use a smaller time frame chart to execute trades or just the 30-minute TPO and market profile chart?
I never go less than the 30-minute market profile. A lot of people, I hear that excuse all the time. Oh, I'm just doing it for execution. What happens when you do that, even looking for execution, you get yourself too short-term oriented and you get back and forth following the bid ask, and it really, very high odds it's going to mess you up. If what you're doing is profitable, then be my guest. My guess is if you're doing that, it's not profitable. If it's not profitable, then you have to change what you're doing. Okay, what else?
On trending days, we don't pay attention to developing POCs. Would you consider potentially also that on days that we stay inside the previous day's range, that we don't focus on developing value as much since the inside bar already indicates we're in balance?
No, yesterday's developing value was extremely important. Because when the market broke yesterday morning and value was developing, is overlapping to higher, that was extremely important information. And that keeps you from wanting, you may, in your mind, you want to be on the short side, but the market was saying don't be on the short side because value was overlapping to higher yesterday. Here, let me take out the overnight so we can get a better look at what I'm talking about in here. Um, okay, I'm trying to get the overnight out. So
It's
here,
gone.
no, I see that. Here's here's the value from Friday, and then look at the value yesterday. Price is an advertising mechanism. Time regulates all opportunities, and volume measures the success or failure. But value helps separate the noise in the market. So yesterday, even though this market sold off, which was liquidation, short in the morning, which was overnight liquidation, value was higher. You don't want to be on the short side of this market. Is that 100%? Nothing's 100%. But this is a good way to keep your head about you. And so many times people get mesmerized by price and they lose perspective of what's really going on. Okay, final question or two.
Yeah, we have a few. Um, Previously, Jim mentioned looking at the monthly, weekly, and daily charts of the market to assess the state of the market. For this, is Jim looking at the SDX, ES, or SPY?
I look at all of them briefly, but I generally, when I'm trading the ES, I look at I start at the monthly, weekly, and daily. And I always start with the largest time frame in order to break my mindset, because at the end of the day, I'm a short-term trader. At the end of the day, my thinking is very narrow. So then I go and I start to the longest time frame, which are the monthly, and then work top down. Okay, final question.
Is it of any relevance that bonds are in range as well with multiple lows around the same level? I mean, are you paying attention to it?
Oh, I'm paying attention to the fact that the yield the yields are higher and the prices are down. There is clearly pressure on bonds, and that is you know that's part of this standoff that's going on in the market. You know, will the Fed raise? Won't they raise? Um, I do pay attention to the bonds in order. I don't make specific trades off of, but I pay attention to the bonds in order to keep a perspective that there's still pressure on that market. Okay. Um, Let me say thank you very much. I hope you consider joining us for some of our educational programs, and we will see you next time. Thanks.
Thank you so much, everybody.
Okay, that was Jim's webinar. You can see he's very anxious to trade. He don't want to miss this opening. There could be something today. It's clear that you can almost feel what he's thinking here. Um, if you watch the webinar, uh, you have seen him, right, telling you that it was a very frustrating week. You know, fire losing, having missed or having losing trades 5 days in a row. It's not such a easy things to overcome, especially, and you can see, right? He has 50 years of experience. If somebody that has 50 years of experience can, I mean, go through this kind of situations, can you imagine people what kind of situations we are facing? You know, we are relatively new to the market, and we are working or starting in this really frustrating market. Uh, look at the volume at the opening. It's slightly higher than yesterday. Slightly higher. Okay, slightly higher. Let's see what the market does with this low here. Remember the spike is the highest seller. Counteraction, no counteraction to overnight inventory. Market's opening at the center. Look at where this market opened. My God, right at halfback POC, right there. It came to the late pullback low, which adds another layer of weakness here. Now we have three wide low here. Okay, remember this from yesterday. One, two, three. Very mechanical way to buy here. And notice how it died up there. Now, opening inside previous day range advertised short. That's one thing. The market is very short. I mean, the overnight inventory is short, absolutely short, 100% short. It's going to be a counteraction here. That is the question. I think that's the question. What I hate here is that I cannot place orders. God damn, something happened with that's happening with my broker. With my I cannot place orders on the option board. I, as Jim, have this strong bias to the downside. You know? And I can see the completions, how completion the market has become with this, with the current situation here. You know, every time the market goes low, it's just being bought. And the same thing that happened in the intraday, like for example now, it's being bought from this mechanical level, absolutely mechanical level here, right? It's being bought from that level. That kind of things also happens in the bigger time frames, right? If there is a trap that is set, like it happened yesterday, like for example, oh, the market is breaking now, I'm looking to the downside, but there was nothing here or here. When it comes here, it has everything to keep going lower. It didn't, right? And just keep going higher. The same thing can happen in the bigger time frames, right? Happen in the monthly or weekly, even daily, right? Or daily, weekly, or even. Um, this is a very narrow range in the monthly, very narrow. Perfect, perfect balance in the weekly. Perfect balance. All of these time frames are in balance. All of them are in balance, and the resolution, either the break or the rally, are going to be. I believe I am in the gym camp with this. I believe it's going to be very violent. Now, what are the odds of this break being to the upside or being to the downside? Now you have seen these divergences that's happening between the Nasdaq and Dow or the ES. When there is a recovery, usually the tech stocks recover faster, or the first one to start to recover. But now there's a really strong divergence here. Does it have to happen? No. Just as he said, it doesn't have to happen. There's nothing. If we knew it was going to happen, I would be sure, right? Everybody will be sure. But nobody knows that. Nobody, or in any case, nobody knows when it's going to happen, if it happens at all. Now, high, half back, low. This low is weak. This high is weak. So what do you do here? Eh? Okay, I am going to be short because this is weak. That's not enough reason to be short. I'm going to be long because it has stopped here. We are going to go to the upside. That's not a reason. We are inside yesterday's range. Uh, the range is tightening. You know, I saw some heavy volume here, selling. I mean, the pressure was on the selling side here. All the times that this market comes up here, up here, up here, up here, the volume just die. But there was one exception here. It was heavy. The pressure to the downside was high. Dies here. Heavy pressure to the downside. Heavy pressure to the downside. Here. You know, it looks like inventory is being accumulated here. Long, either long or short. But you know, uh, I hate saying my personal experience because I don't have too much experience, right? Relative, if I compare myself to Jim. But usually there's some kind of trap fears that sets. You know, we are going to the upside and everybody start buying, right? Everybody, everything is nice. Everything is flowers and roses, and without, and you know, when you don't, when you less expect it, boom, it happens. And that's the thing. This is the randomness of this business. We never know when something is going to happen. Never know. And that's why I believe these strategies, you know, LSI, MACD, or buy the dips or whatever, they don't have actually any fundamentals behind it. Right? Because for those strategies to work or to work all the time, the market has to be mechanical. You should be able to enclose the market into a formula. Okay, you buy when it reach that level, or you sell when reach that level. It is not like that. Okay, we have to embrace randomness, uncertainty. Okay, incertidumbre. El negocio es la incertidumbre aquí. Oops, what the heck did I do? Same as yesterday. Market has opened inside range. We have a counter-reaction to overnight inventory yesterday. We are not having that, or at least not with the same strength that we have yesterday. This high is not good, this low is not good. The reasons for the reasons we talk, right? We have a level as three white low. This one, E, I, and A are at the same level. There's a bunch of stops here on the low side. Same happens in the opposite side. On the opposite side, this selling here is coming from Halbach, and the whole inventory is short. The whole overnight is short. We are having more chop today than yesterday. Yesterday, chop was expected. Chop was advertised, but we didn't have too much chop. And traders do what works, and it doesn't work anymore. Yesterday, the market advertised chop at the opening, but it just break, right? It just did a counteraction to the overnight inventory and break. It dies after the second period, and now we are having more chop than yesterday. These are the things, you know, why when market generated information is very important. Okay, and keep an open mind. Just keep an open mind. Don't get biased. It's very hard to not to get biased. You can see, right? You hear Jim. Like he's super biased to the downside. He's super biased to the downside. And what happened to him is he was positioning himself for a break, but the break didn't happen. Right? The break just didn't happen. Look at this volume here. The volume is in the lower side, matching lows, low, low, low at the same level. Come on. Oh, come on. Right? One, two, three. This level is absolutely bad level to be a buyer. Right? The market, I was dying to short the market. I actually did a short. I bought a put yesterday to 4100 when the market was doing a counter action. But I did something. I tried to trade to the upside first. I made two trades to the upside with futures. And what helped was value. Just like he said, value. This area here. Value was higher. Market was breaking here, but value was higher. So that's something you don't want to do. You don't want to be short in a market where value is higher. Because you got this bias. I want to be short, but I want it because I saw that you can see the weakness in the lower side, but value was higher. But market was going to the upside all day long. Very tight range. Uh, this is just crazy here. You know, range and monthly is in range. Weekly, you have 7 week range, 2 week range, two wide week range, and inside day, and now we're having another inside day. This is super balanced market, right? Range is big. What is the trade here? You know, the trade is the breakout of the range, but this is the weekly time frame. Remember, this is a weekly time frame. The daily also have an inside. I mean, you have an inside day from yesterday. You have this day from yesterday. This is an inside day. Now we have another inside day, so far at least, right? So far at least. I guess the key, I don't know, man. You had to do a lot of mental work here as well, a lot of imagination. You got, what is going to happen? Value. Look at this. Value is inside value. It's true. We are just not even the first period has ended. We are just in the open. And value is inside value. What we have, if value develops lower but market goes higher, that's more weakness. Look at that, man. And now where this high is stopping? I mean, how I am going to be? How do you want me to be long here? Look at the low here. Look at the low here. Three wide low. Value inside value. Now, to be short, high. This is a counteraction here. What's happening? What you are seeing here is short covering. Can you see how fast it goes? It's taking all the shorts from the overnight. This one is taking off. Those are stops being hit really fast. It's still inside value. Let's see if the market can get out of this value. Then you have saddle, then you have last. Remember the spike is right at saddle. Right there, right in between saddle and last, around this area here, around the center of this. But boy, this is hard. It's very frustrating market. This could have been a long, but when the market was sold from POC, there was some quick long here. But it stops very tight stop. That trade is over, right? That trade is over because the trade was just taking POC. Just that. This kind of markets, you gotta profit, you gotta win. Don't always say you're welcome because it's a very uncertain market. This can have a big break. It can keep going higher, and then it just can come back like 5, 7 points at once. Boom. All right. Oh, it is nice. Gosh, look at that. Oh gosh. Can you see the power of biases? I got this bias to the downside, but consider the overnight inventory as well, right? Consider the overnight inventory. Overnight inventory was 100% short, and especially this spike here. This was retail sales coming from seven. Now pretty much all these are out now. A squeeze, if you're going to squeeze the shorts from the overnight, because there are still shorts that have not covered here. Notice where it has stopped this market, right there, last. I don't want to be long here, but being short is also the last thing I want to be. Well, and that's why options are very useful in this kind of markets because you limit your risk. Very uncertain markets. All right. We have to be able to adapt really quick as well. This high is no good. This low is no good. Can this be a range? Can we still have more tightening here? That would be unbelievable, man. If this market, if this market has this range and trades sideways here, that would be unbelievable. That would be unbelievable, man, because you have a range 1, 2, 3, 4, 5, 6, 7 day range. Then you have an inside day, and then another inside day. That would be crazy. Oh, now the upper side. All this inventory here has been removed, right? There was potential to firecracker effect here. One this stops taking, then this one as well. All these stops have been removed. All these longs have been removed when the market open when it opened somewhere down here and boom. So these are out now. This one still remains. This could be here, this could be here. There's a lot of here as well, and this one as I don't know about this. Yeah, I think this one as well because there was huge volume here. No small trading here, kind of like a big ones here, and this one as well. Okay, and around this level, you got one, two, three lows, three lows. I mean, a strong market. Can you see how much has retraced? Almost half of the range. Actually, it was bought from Harvard. I hope you've seen that. It was bought from this level, and then out we go again. Very short-term trading here. And now the same thing that happened yesterday. The traders don't realize that could be that the break that we have yesterday. I myself got caught there because I thought there was going to be something bigger there. Now something the opportunity was going to be bigger. The same thing is happening now, but in the opposite direction. Right? There's some. This is short covering, right? You have seen how fast this market went. The market stopped here first, do some back and forth, um, up we go, but really fast. Boom, 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 boom. That is short covering. What about the volume? That's a nice volume, isn't it? Well, at least almost as much as yesterday, and we still have one third of the period to go. If this is half, one third will be up here. Let me move this one. Let's see if that materializes. If let's see. Okay, this is two thirds. Consider two thirds. Now, if the same volume keeps going, we should have volume this high. Now, this low has been repaired, but there's also but here. I don't think this is good enough. Can you see how fast this came down? Now this hasn't been removed now. Okay. This one's I think that now is there. This has been corrected now. How fast we are from this high all the way to the opposite side and downside extension. Really fast. And god damn it, my options are not working yet. Okay, see, I cannot place anything here. Now the weakness now is in the upper side. You know have to be you have quick to adapt to make the adjustment. This weakness has been repaired. Volume is higher. Man, I hated this coming exactly from last man. Could have it was sold from here or up here. Ah, yeah, yeah. Okay. It is almost 10. Unless you have any questions or comments, can you see, the way how you adapt, how you adjust, right? It helps to have a plan. It was we were talking about, that this market is really hard to be long when you know the weakness that is underneath. But that doesn't mean that I'm going to be short. And we have this big rally here, really quick. Okay, the market is going to the upside. Let's buy it. But mistaking short covering from the overnight with a more really strong buying is it's what leads. It's what sets the mental trap here. No, and now we were up here in less than 5 minutes. I didn't count. I guess it was kind of like, yeah, less than 3 minutes, something like that. 3 minutes. We went from way up here to this low, this triple low, and extension. Now this low has been corrected. Right? Now has been corrected. What is value? Value is inside value yet. It hasn't moved. It couldn't take value. It couldn't take the high, but it was sold from the last. No mechanical selling here. Volume dries here. Volume dries up here. Heavy activity around the 41.36, around this level here. There's a bunch of stops here. What I want to see this level holds here. This level holds here. Traders get emotional, right? Now they see the market breaking. Wow, okay, let's go back. Now the market is breaking, let's short. It is true. There is very weak level here. One, two, three weak levels. When those levels are going to be repaired? Nobody knows, but the weakness is there. Still an inside there. A lot of chop here. High volume. Seems. When was the last time we got this kind of volume? 3 days ago. 1, 2, 3 days ago here. I would like to be 4, like this day. 1, 2, 3, 4 up here. Still kind of low relative to most of the days. This is a very nice volume here. This is at least it's going to be higher than yes. It is higher than yesterday already. Seems like it's going to get over here. That would be like 10, 15, maybe 15, 17%, something like that. Higher, maybe more, maybe yeah, around 15%. Gosh, why you have to do this? This was a trap here. When I call the intraday volume, regarding just the ES, but nothing else, right? Not this volume here, but just zooming in, right? I'm doing 30 minutes, but I am going to zoom a little bit further. You can see a lot of volume here and heavy volume here. Just one tick below 3750, this level here. Uh, this is high volume here. This is a high mark. The 36, and that mark was from yesterday as well, if I can recall. If I recall well, let me check. I got it here. Let me show you. Okay. These levels here, high volume, high mark, are around the 40, 34 something, right? Around this kind of like around this level here. Okay. Which is the difference between where volume is being accumulated, and I believe these are bigger time frames. Could be the bigger time frames. Don't waste your time doing too much of it. Uh, I'm just trying to understand a little bit more what could be happening here. This level is being tested here. I want to see more volume comes now here. Hate, man, hate that I don't have this. I cannot place anything here. Oh, yeah, yeah. Well, let's go. Let's adapt. 30 seconds. We are about to change periods. Look what's happening with the bond market now. The 30 year has took these lows out. Now it is going to have downside extension, downside continuation, or it's come back into range and target the opposite side. Okay, right here from this level, right around that level. Let's pull back low. Again, the battle continues here. How much volume do we have? 18% higher than yesterday. Kind of like a mechanical level to me, this level here. You know, value is moving, starting to move low. It's overlapping to lower now. The main thing is we still have an inside day. Value is moving lower with only two periods. With only two periods in the market. That high. Oh, this is 10 a.m. Okay, as I say, there's no questions. Okay, so I'm going to call it a day. Wish you guys a good rest of the day. Stay safe out there and good luck. See ya.